Buying a house is a big decision, and it is normal to ask questions, especially if it is your first purchase. You may be wondering how to get down payment assistance, or how to get help with closing costs as a first-time home buyer. A crucial first step in the home buying process is to investigate local and national assistance programs for the first-time home buyers. Mortgages with favorable interest rates are often combined with closing costs and down payment assistance programs. There are some states which offer tax credits which you can use on your federal tax return. Depending on the program, new home buyers may be able to increase their chances of owning a home in their desired geographic area. Or they may be able to help people with particular careers like educators, first responders, and active duty military and vets. The process of buying a home can be overwhelming for some people, which is understandable. You can achieve your dream of home ownership with the first-time home buyer programs and grants. Hello guys, welcome to my channel. In today's video, we will discuss what to do and what mistakes to avoid when buying your first home. Find out which grants, loans, and programs are most advantageous for first-time home buyers. 1. Conventional loans with no down payment. Borrowers with strong credit scores and lower down payments can qualify for these programs within a 3% minimum down payment. Freddie Mac and Fannie Mae both back the conventional 97 mortgage program, which requires only 3% down and a 620 credit score. Private mortgage insurance, which is an extra cost with conventional low down payment mortgages, is also required for borrowers who choose low down payment mortgages. Home Ready Mortgage requires only 3% down and offer flexible underwriting. Home Possible Mortgage, similar to Home Ready, the Home Possible Mortgage requires a 3% down payment. Home One Mortgage, with this Freddie Mac mortgage, you only need 3% down with PMI. However, you must meet some special criteria. It is not possible to get these programs directly through Fannie Mae or Freddie Mac. They are only available through a variety of lenders, including banks, online lenders, and credit unions. 2. Government loans with low down payments. A government loan is a mortgage backed by a government agency, such as the Federal Housing Administration, the Department of Veterans Affairs, or the Department of Agriculture. Although they're not created or funded by these organizations, they're offered by approved mortgage lenders throughout the country. There are even some lenders who specialize in particular types of loans. FHA, VA and USDA Loans. FHA Loan, insured by the Federal Housing Administration. FHA Loans allow borrowers with a minimum credit score of 580 to purchase a home with as little as 3.5% down and at least 10% down, or as low as 500 with at least 20% down. FHA Mortgage Insurance, which includes 1.75% upfront fee and annual premiums, is required if you put down less than 20%. With low credit and no down payment requirements, FHA also insures FHA 203 loans, which allow borrowers to buy and fix up a home. The A loan, members of the U.S. military who are active duty, veterans, as well as their family members are eligible for loans that are backed by the Department of Veterans Affairs. Compared to other types of loans, VA loans have lower interest rates and no down payment is required. It is necessary for borrowers to pay a funding fee, but it can be rolled into their monthly payments. This fee may also not be charged to some service members. USDA loan. There's no down payment required for some rural homes because the U.S. Department of Agriculture guarantees loans for 100% financing. To qualify, you don't necessarily have to own a farm or live on livestock, but you must live in a USDA-eligible area. A fee is also charged for this type of loan. Energy-efficient mortgage. In order to finance green upgrades, you can get an energy-efficient mortgage. Using a mortgage like this allows you to include energy-efficient upgrades in your primary loan without having to put down a large deposit. EMs, however, require higher mortgage payments, and certain requirements need to be met, such as having an energy assessment performed. Good Neighbor Next Door. Good Neighbor Next Door is a program sponsored by the U.S. Department of Housing and Urban Development, which provides housing aid for law enforcement officers, firefighters, emergency medical technicians, and pre-kindergarten through 12th grade teachers. Borrowers who live in a revitalization area for at least 3 years are eligible for 50% off. On the website of the program, you can search for properties in your state. HomePath Ready Buyer. As part of its HomePath Ready Buyer program, Fannie Mae offers a foreclosed home to first-time homebuyers. Borrowers who take a required online homebuyer education course can receive up to 3% in closing cost assistance towards the purchase of a HomePath property, which is a foreclosed home owned by Fannie Mae. However, you won't be able to choose from a wide variety of properties, many of which may need repairs, so this program may not be suitable for everyone. Native American Direct Loan. The Native American Direct Loan provides financing to eligible Native American veterans and their spouses for the purchase, improvement, or construction of a home. VA is a mortgage lender on this loan, as opposed to a traditional VA loan. Neither a down payment nor mortgage insurance are required with this type of loan, but a funding fee is charged. 3. Programs for first-time homebuyers offered by various states and localities. State and local governments provide most government home buying assistance. Depending on where you live, individual programs may differ. A complete list of state-specific buying resources can be found on the HUD website. 4. Down payment assistance. With down payment assistance, first-time homebuyers can more easily afford a home. DPA can be a grant, a second mortgage, or matching savings. Down payment grants. Essentially, down payment or first-time homebuyer grants help you cover the cost of your down payment or closing costs. Most grants are awarded to borrowers earning less than 80% of the area median income, usually referred to as low or moderate income borrowers. Additionally, they require a minimum credit score and a limit on home purchase prices. Make sure you apply for multiple grants, so don't be afraid to ask for more financial help. The following are 3 popular grants for first-time homebuyers: National Homebuyers Fund, Bank of America grant programs, Chase Homebuyer Grant, down payment assistance loans. Furthermore, down payment assistance loans can be used in conjunction with the first mortgage you use to buy the house, such as there are also low-interest second mortgages that can assist borrowers with closing costs and down payments. A few years after receiving the loan must be repaid. Deferred payment loans. There is no interest on these types of loans, but they must be repaid in full at the time of selling or refinancing the home. Forgivable loans. With this second mortgage, you will be able to forgive your mortgage as long as you remain in the house for a long period of time and make timely payments on your first mortgage. Down payment savings match. Borrowers can increase their down payment by matching their savings through down payment match programs. Programs like these are structured over a set period of time and provide matched funds for down payments and closing costs up to a certain amount. The individual development accounts that some state-level housing finance agencies offer contribute $3 for every dollar the borrower saves. An IDA is an account where eligible individuals deposit funds over a specified period of time with the assistance of a counselor. At closing, the borrower will receive the match if she follows the plan and saves the required amount. 5. Assistance for first-time homebuyers in other forms. Employer-sponsored programs. A program that provides housing assistance to employees, usually in neighborhoods near their work sites, is called employer-assisted housing. A forgivable loan can be combined with homeownership education to provide this type of assistance. Generally, EAH programs are only available to certain occupations, and there may also be income restrictions or requirements for first-time homebuyers. Nonprofit programs. For first-time homebuyers seeking affordable mortgages, nonprofit programs can offer exceptional value. Neighborhood Assistance Corporation of America, for instance, offers low-rate mortgages without requiring down payments or closing costs to low and moderate income borrowers. In order to qualify borrowers, the nonprofit uses character-based standards as opposed to risk assessments performed by most mortgage lenders. In addition to nonprofit programs available at the state and national levels, local programs are available as well. A down payment assistance program offered by New York City offers up to $100,000 to eligible borrowers. The benefits
benefits of first-time homebuyer programs. It is possible to afford becoming a homeowner with the help of a first-time homebuyer program, either through more flexible credit requirements or a competitively priced mortgage and down payment assistance. The majority of programs also require you to take a homebuyer education course, which will prepare you for the financial responsibilities of homeownership. Make sure you qualify for a first-time homebuyer program before looking for one. Most first-time homebuyer programs are available to buyers who have not owned a home within the last 3 years. Renting or investing in properties, regardless of whether they are considered primary residences, is included in this definition. There is also the possibility that some of these opportunities are only open to individuals who meet certain income requirements. There are also some government-backed programs that require properties to meet certain standards before qualifying, such as FHA and USDA loans. A home purchase is a major financial decision, so once you've established a realistic budget, talk to a loan officer with experience with first-time buyers. The lender might not be your bank, but a credit union or another type of lender. You can find a lender by visit the U.S. Department of Housing and Urban Development State Information page. You can also find programs by city.
Okay guys, thanks for watching. If you enjoyed today's video, please drop a like button. If you like my contents, please subscribe to my channel for more financial videos. And I will see you soon.